Hello everyone and welcome to our channel. We at Make More Moolah go to great lengths to produce all of our videos with sound and relevant information that truly applies to the savvy investor. None of us are exempt from the concerns or conditions that can affect our financial situation. Taking a proactive and more educated approach to how we handle money matters has proven time and time again to produce positive financial gains. We do not believe in coincidences, and we feel that there is always a timely reason for viewers to connect with our videos. Before we get started, make sure to subscribe to our channel and leave a comment below saying, "I subscribed." We will do our best to reply as soon as possible. Thank you. Introduction. Real estate has long been regarded as one of the most reliable ways to build and preserve wealth. Unlike stocks or bonds, real estate offers a tangible asset that can generate passive income, appreciate in value over time, and provide significant tax advantages. Whether you're a seasoned investor or just starting your journey, understanding the different real estate investment strategies is crucial to making informed decisions. In this video, we'll explore a variety of smart real estate investment strategies that can help you achieve your financial goals and create long-term prosperity. 1. Buy and hold strategy. The buy and hold strategy is perhaps the most traditional and widely used method in real estate investing. It involves purchasing a property and holding onto it for an extended period, typically years or even decades. The main objective is to earn rental income while benefiting from property appreciation over time. Pros: steady cash flow from rental income, long-term appreciation potential, tax benefits including depreciation and mortgage interest deductions. Considerations: requires property management. Market fluctuations can affect short-term value, maintenance, and tenant-related issues. This strategy works best in areas with strong job markets, population growth, and high demand for rental housing. It's ideal for investors seeking long-term stability and wealth accumulation. 2. House hacking. House hacking is a beginner-friendly strategy where you live in one part of a multi-unit property and rent out the other units. This approach allows you to offset or completely eliminate your housing costs while building equity. Pros: lowers or eliminates personal living expenses, builds equity with tenants paying your mortgage, qualifies for residential financing, e.g. FHA loans. Considerations: requires a willingness to live on-site, involves landlord responsibilities, may not be suitable for everyone's lifestyle. This is a powerful entry strategy for first-time investors or those with limited capital. It allows you to enter the market while living affordably and gaining valuable landlord experience. 3. Fix and flip. The fix and flip strategy involves purchasing a distressed or undervalued property, renovating it, and selling it at a profit. It's a short-term investment that requires an eye for design, good project management skills, and a strong understanding of the local market. Pros: quick potential for profit, hands-on experience in property valuation and renovation, no long-term tenant issues. Considerations: high risk if market conditions shift, requires access to capital and renovation expertise. Unexpected repair costs can eat into profits. Fix and flip is well suited for investors who enjoy working on projects and are comfortable with higher levels of risk and involvement. 4. BRRRR Strategy. Buy, rehab, rent, refinance, repeat. The BRRRR strategy is a hybrid model that combines elements of flipping and renting. Investors purchase a distressed property, rehab it to increase its value, rent it out to generate income, refinance to pull out equity, and then repeat the process with another property. Pros: allows portfolio growth with limited initial capital, builds equity quickly, produces rental income. Considerations: requires solid rehab and rental market knowledge. Refinancing may be challenging if the property doesn't appraise well, time-intensive process. This strategy is effective for investors looking to scale their portfolios rapidly while maintaining cash flow. 5. Real estate investment trusts, REITs. REITs allow individuals to invest in real estate without owning physical property. These publicly traded companies own and operate income-producing properties, and investors can buy shares much like they would a stock. Pros: highly liquid and easy to invest in. Diversification across multiple properties and sectors. No management responsibilities. Considerations: less control over specific property decisions. Dividend income may be taxed at a higher rate. Sensitive to market volatility. REITs are perfect for investors who want real estate exposure without the hands-on commitment of property ownership. 6. Short-term rentals, Airbnb model. Investing in short-term rentals has become increasingly popular with the rise of platforms like Airbnb and Vrbo. Properties in vacation destinations or major cities can generate high income from nightly rentals. Pros: potentially higher returns than long-term rentals. Flexibility in personal use. Opportunity to serve the growing travel market. Considerations: local regulations may limit short-term rentals. Seasonal income fluctuations. Requires active management or a property manager. This strategy works well for those looking for high cash flow and who are comfortable with a hospitality-focused approach. 7. Commercial real estate. Commercial real estate includes office buildings, retail spaces, warehouses, and multifamily apartment buildings. These properties are typically leased to businesses and generate higher rental yields than residential properties. Pros: higher income potential, longer lease terms. Tenants often cover maintenance, triple net leases. Considerations: larger initial investment, requires in-depth market knowledge, sensitive to economic cycles. Ideal for experienced investors, commercial real estate can offer significant rewards with proper due diligence and strategic planning. 8. Real estate syndications and crowdfunding. These options allow investors to pool their money with others to invest in larger real estate deals managed by experienced sponsors. Crowdfunding platforms and private syndications have opened up opportunities that were once only available to institutional investors. Pros: access to larger deals with lower individual investment, passive income potential, professional management. Considerations: illiquidity, funds may be tied up for years. Limited control over property decisions, requires trust in the sponsor's expertise. These strategies are ideal for investors who want to diversify and earn passive returns without the responsibilities of direct ownership. Conclusion: real estate investment offers a diverse range of strategies that can suit different financial goals, risk appetites, and levels of involvement. Whether you're aiming for long-term passive income, quick profits from flipping, or a balanced mix through REITs and syndications, there's a strategy that can work for you. The key is to understand each approach, evaluate your resources and preferences, and start with a clear investment plan. As with any investment, education, patience, and due diligence are your best allies in building a successful real estate portfolio. If you found this video helpful, please give it a thumbs up. Subscribe to our channel and hit the notification bell so you don't miss any of our future videos. Share your own tips and experiences in the comments below. Thank you for your time invested with us today, and please remember, we are here to help you make more moolah.